moving on to the cash budget, the next question. So the first question is preparing a cash budget for January 2021. Remind that these budgets are at the monthly level. So before we head on to actually calculating the cash receivables and cash disbursements, let's make some adjustments. For example, cash collections from receivables. It says that 40% of accounts receivables are collected during this month, and another 60% are collected in the next following month, right? So what was the accounts receivables? So what was the sales revenue number in our previous problem in chapter 42? So it's important to note that you have to first figure out and come up with numbers in chapter 42, chapter 6-42, in order to solve this question. They are connected. So if you recall, the January revenue number was 1,885,000. So because this is the current month revenue budget, we need to multiply by 40%. And then the remaining. So if you see the second table, there is the budget information from the previous month in December 2020. The budgeted sales is $1,650,000. And these are going to be collected in the following month, which is January. So the 60% of them. So when we calculate this, we have $1,744,000. Yeah. And then there's another adjustments we need to make in terms of the accounts receivable for, especially for the direct materials. It says that the direct material purchased in credit will be 50% paid during the month, and another 50% will be paid in the following month, right? So if you recall, what was the direct material purchase in Schedule 3B? So it was actually $1,021,600. Yeah. So out of this number, 50% is paid. If you also see the second table, there is the budgeted material purchase in the previous month of $820,000. So out of this, also 50% is paid in cash. So if you calculate this, we will have number equivalent to $920,800. Next thing we need to make adjustments for is for the fixed MOH as well as the fixed non-MOH. So it says out of the fixed manufacturing cost, $64,000 are depreciation. So depreciation cost is not related to cash, right? That's something that we need to subtract from the accrual basis fixed overheads that we have calculated. So if you recall from chapter 642, the fixed manufacturing overhead was $81,000. So out of this 81,000, we need to subtract 64,000 to reach the fixed MOH we pay in cash, so 17,000. And non-manufacturing, So it's going to say fixed NMOH. So this was also given in the previous problem as 35,000. And out of this 35, 17, is it right? Let's see. Oh, 10,000. 10,000 are depreciation, which we also need to subtract. So we have $25,000 that we pay in cash. Okay. So now let us really prepare for the cash budget for January 2021. So we start from the beginning balance. So it says the beginning balance is $124,000. So the ending balance of the previous month should be equal to the beginning balance of January, right? Which is 124. On top of that, we also need to add up what's called the cash collections from sales. So this is $1,744,000. So these two make up what's called a cash available for needs. In this case, I'm going to, for convenience reason, I'm going to not write those down. But then we need to also deduct all the disbursements. So keep in mind that all other costs except for the things that we have adjusted are gonna be paid in cash. Okay? So let us first start with the DM purchase. So for DM purchase, we need to plug in this 920,800. Okay, and then we need to consider the DL, right? So DL will be also paid all in cash. From the chapter 642 problem, we have already calculated as 377,000. Now the variable MOH also comes. We have already calculated as 91,000. These are all subtractions. And then for fixed MOH, instead of using this one, we are using 17,000. And then we also have marketing. Let me just use it as variable non-manufacturing. So if you recall, this was 9,500. And then for the fixed MOH, we are using this number, 25,000. If you read carefully, there's also one more element that we need to further subtract, which is that the company board of directors are going to pay $160,000 dividend to stockholders. So that's also something that we need to take into account. Yeah, so after subtracting all these from the cash available for needs, the ending cash balance that you should be getting is equal to 267,700. Yeah. The next question is the company is interested in maintaining a minimum cash balance of $120,000. Will schools be in a position to pay $160,000 dividend in July? And the quick answer is yes, because even after paying off the dividend to the stockholders, they still have the cash that is even more sufficient than a minimum cash balance of $120,000. So the right answer would be I believe this question also has a further questions on budget to balance sheets. If you're ever interested, feel free to go ahead on preparing those. But that would be outside of what we have dealt with in our class. Okay.